All right, I got the recorder going now, so we're in chapter 17, and what I'll do here now is share my screen. Macy, can you tell me if you see? All right. Nope. Do you see a exercise? All right, good. Hey, I'm getting a little better with this. You see that? I'm at the bottom of the screen. Oh, I apologize. No one wants to see. All right, let's look at number 27. This is on page 837. And what they're doing here is the landfill. And what's interesting about number 27 is A, they're telling you to look at it as an enterprise fund. B, it's in the general fund, but it's government wide. C, again, it's enterprise fund. And then finally in letter D, it's the general fund for the fund financials. And let's just quick read it and then we can show how this is kind of a neat problem. On January 1st, this city created a solid waste landfill that expects to reach capacity over the next 20 years. If the landfill were to be closed at the current time, the closure cost would be approximately 1.2 million and an additional 700,000 for post-closure. Of these totals, the city must pay $50,000 each December 31st. At the end of 17, the landfill reached 3% capacity. At the end of 18, it reached 9%. Also, at the end of 2018, a reassessment is made. Total closure costs now are to be 1.4 million rather than 1.2. Okay, so we look at this exercise. Letter A is government-wide, but more importantly, it's enterprise. Government-wide, general fund. Letter C, fund, but enterprise. And letter D, fund in the general fund. Well, what's interesting is enterprise and government-wide really do the same thing, right? I mean, they account for it the same way. So government-wide is like what we know it today, right? Our normal accounting where we record the liability and we, it's like what we do for accounting today. So on December 31st, we know it to be 3%. We accrue for it. They paid it again. They accrue for it again, and they paid that 50,000. Excuse me, I'm going to sneeze. Maybe not. Letter B, again, it doesn't really matter that it's general fund or if it's enterprise fund, it's government wide. So letter B is exactly the same again as A. We accrue for it, we paid that portion. We accrued for it, we paid that portion. And letter C, even though it's fund financials, which would tell us it's going to be different, except they tell us it's also in the enterprise fund. Well, then, because it's enterprise fund, it's going to be exactly like A and B. Accrue, pay, accrue, pay. Letter D is the only one that's truly fund financials within the general fund. So then there is no accrual for the liability in either year. It's just the expenditures. Notice that? So notice here all the way A, B, and C, expense, expense, expense. And letter D is where we use expenditure. It's an interesting problem because when we know that it's government-wide, A and B, we know that we're going to use the words expense because it's, well, let me take that back a little bit further. In letter A, we know we're going to use expense because it's government-wide and it's an enterprise fund. Letter B, we know we're going to use the word expense because, again, it's government-wide, but it's a part of the general fund. But particularly, it's the government-wide. Fund financials, again, we would have used the word expenditure, except it's in the enterprise fund. Normal accounting, so we're going to use the word expense. We accrue for it. And then in letter D, where we truly are using fund financial accounting, we're going to use the word expenditure. Any questions on number 27? I think it's a good one to review. Number 28, I believe, is quite similar. It says the City of Lawrence opens a solid waste landfill in 17 that is 54% of capacity on December 31st. The city initially anticipated closure cost of $2 million, but later this year decided the closure cost would be more like 2.4. None of these costs will be incurred until 2021. All right, so letter A, what would appear on the government-wide? All right, government-wide. Well, just like what we did above, we're going to show the liability and we're going to show the expense, right? So the liability is 54% of 2.4 million, coming straight from the book, and 1,296,000, the amount needed to establish above the liability. So this expense, the same dollar amount. So we're going to book the expense and the liability. Fund financials, this is the big deal of fund, right? Despite it having this gigantic liability out there, it didn't use any current resources, so we don't put anything on the books. That's what we always say is the negative of fund financials. You don't see that black cloud that's hanging out there. You only are looking at really this year, this fiscal year, and the resources against it. Not any different than number 27. Number 29, it reads here, the city of Columbus has approximately 2,000 employees. For the past 3 decades, the city has provided its employees with a defined benefit pension plan. The plan contract calls for specific payment amounts to be made to each retiree based on a set formula. Money is transferred periodically to the pension trust fund where it is accumulated and invested so that the eventual payments can be made. Letter A, describe how the city determines the amount, if any, of a net pension liability that should be accounted for in the government-wide. Well, without reading all of this, any one of you three want to say it's government-wide, what would be the key that we want to record there? Yeah, very good. I'm not sure if somebody's got, there's quite a bit of feedback. If you just want to check and see if you're muted, and then when you talk, just unmute yourself, but there was quite a bit of feedback. Very good. It says right here, a net pension liability, an estimate that will eventually need to be paid. Good job. Letter B, describe how the city determines the amount, if any, of pension expense that should be reported. Oh, the pension expense. Okay, so for the state and local government, the amount of the pension expense to be recognized in the current period is made up of several components. And of course, and what we're looking at here is interest expense. It's essentially, exactly, it kind of goes along with what Macy had in letter A. You record that liability and then the expense that would go along with it. And of course, as you're going on, that liability needs to be increased, but potentially, your expense is going to be different. It could be. Did I lose you? Do you still hear me, Macy? I'm back. Thanks for hanging on there. I don't know what happened. So, okay, let me share my screen again. Sorry about that. Um, so, of course, there's always going to be adjustments to the cash account too, for the payments and whatnot. So, that liability might be different, but we are always going to have to be addressing the expense and the liability for both A and B. Letter C, how is the pension reported in the fund financials for the government-wide funds? Okay, because pension plans often establish payments that will not be made until far into the future, reporting on the fund financial statements for the governmental funds is often quite limited. Monetary amounts transferred to the pension plan must obviously be recorded. So, of course, anything that's happening in this fiscal year, this 12 months, that, of course, would get recorded. But that gigantic liability out there, that's the problem with fund financials. So you don't see it. And, that's one of the big negatives prior to the whole government-wide financials put together is you might be the next incumbent, mayor or governor. And if you didn't know this gigantic liability that's looming out there, it could certainly make a big impact on your current year's budget. Oftentimes there's these no interest or principal payments. It's just a one-time balloon payment that's out there 5 years. Well, that's gigantic. That's something to factor, and it would certainly make a difference in whether you're going to start making payments or you're going to need to refinance again. Number 30, on January 1st, a rich citizen donates a painting valued at $300,000 to be displayed to the public in a government building, although this painting meets the 3 criteria. And just make a note of this in your book. The 3 criteria are noted on pages 800 and 801. What is the 3 criteria? It's on pages 800 and 801. The town officials choose to record it as an asset. There are no eligibility requirements for the gift. The asset is judged to be inexhaustible, so that depreciation will not be recorded. So letter A, what do we do with a government-wide? Well, government-wide, we're going to record the asset and revenue. So if you had to do the journal entry, it's a debit to an asset and it's a credit to this revenue. Again, now look at letter B. It says, okay, we want to do depreciation. This is not any different, folks. You guys know this. You're going to still record the asset. You're still going to record the revenue. See that? 300 and 300. And then the next journal entry would be a debit to depreciation expense and a credit to accumulated depreciation. So again, government-wide is what you know, what you're going to record. And then government-wide for letter C, it says, how does your answer to requirement A change if the government decides not to capitalize it? So now, instead of a debit to the asset account like up here in letter A, well, if we're going to still record the revenue, we're going to have to also offset it with the expense. I'll be very honest with you. This to me seems pointless. You're going to have 1 year where you're going to have excessive revenue and expense. If anything, if I was to pick A, B, or C, I don't think I would pick letter B, simply because depreciation expense to me from a governmental standpoint seems like a lot of extra work for no apparent value. I would probably go along with letter A. Why I like letter A is you would still record the asset and there would be some type of tracking method so you know what you have for assets. Questions on 30? Okay. Let's look at number 31. Amanda, do you want to read 31? I just got a chat here on the bottom of the screen from Macy that said, I'm sick and tired of hearing your voice. Let somebody talk. Good job. So number 31, that last sentence of that paragraph is really talking out of both sides of their mouth. Uh, it's viewed as inexhaustible, but yet they want to depreciate it. That doesn't make sense. So letter A, we're going to record it. So it's government-wide in the governmental activities. Right, governmental activities, debit the asset, credit cash. They purchased it, and then now they're saying we're going to depreciate it over 20 years, so 60 divided by 3,000 per year. Fund financials, again, if this is fund financials and we're thinking where's this going to be put, well, it would be in the general fund. So now we bought it, we're going to debit expenditures and we're going to credit cash. Debit expenditure, credit cash. Notice here, government-wide expense, fund expenditure, okay? Any questions on 31? Okay. 32. Macy, do you want to read that one?
The city government backs streetlights.
Okay, again, so this is government-wide, right? Government-wide. So, and a lot of you are, I suspect, are concerned or starting to get nervous about, oh my gosh, these account names, I never would have come up with infrastructure assets dash streetlights. That's not the point of this chapter or these chapters. Honestly, what the point is, you're going to debit an asset account and you paid for it. And then here's one option where they're depreciating it. So they got depreciation, it's over 10 years. And then what's the key word in all of this right here? Expense. They have some kind of expense. And then they later in the problem, Macy read that they constructed another $78,000 more. So again, some type of asset, streetlights, whatever you want to call it, and credit cash. There's a second approach. So it's a very much of a modified approach. So you're going to debit again, like we did up here, the asset and credit the cash. And then what they did here is they debited the expense, credited the cash, just like we did in letter A, or this first possibility. And then here, where they added it again to the asset and credited cash, what are they just not doing? The depreciation, okay? Now, I just got done telling you a while back, or a few minutes ago, that depreciation to me is often, I don't understand the value, or I don't see the value in it. Now, here's a difference. Well, for instance, I told you this already, I think, when we actually were still meeting face to face, that, and this could have been in auditing too, so tell me if this doesn't sound familiar. When we did the last audit or 2 audits ago of USF, the auditors were questioning the life of Jordan Hall. And because it's long beyond its life, right? So the question was, what should have that life been? Well, there are some assets, that building, the interior you might have to redo and fix, right? But the outside structure, even if it went through a fire, it would still be there. That quartz isn't going to go away. It's very, very, very unique situation. But like with these street lights, they do deteriorate over time. It's just over time they weaken. So then the depreciation is nice to see if you can at least tie the depreciation. Now, this is the caveat. You can't have this big, huge accumulated depreciation number because you don't know where that pertains to. But as long as you have that depreciation linked right below the street lights, separated out, you can kind of look at it. Then you don't have to drive around town and say, oh, the street lights are depreciating. They look terrible. You can look at the financial and say, well, look, we had $300,000 or $378,000 worth of streetlights, and we've got about $350,000 already depreciated. That would be an indication to you to think, oh, you know what, going forward, we may need to budget some dollars for, street light replacement. So then I see some value into it because they really do give you some information. All right, that takes care of number 30. Takes care of 32. Let me pull up another one here. 33 and 34. All right, 33. The city of Francos, Texas, has begun the process of producing its current comprehensive annual financial report, commonly known as the CAFR. Several organizations that operate within the city are related in some way to the primary government. The city's accountant is attempting to determine how these organizations should be included in the reporting process. All right. So letter A, what is the major criteria for inclusion in a government's CAFR? Can someone look back in the chapter and tell me what page we are referring to? Anybody want to? We're starting on page 803, right? 803 is comprehensive annual financial report. And that right there, it talks about what are the sections. You got the introductory section, and then it's the financials, and then the statistics. And the question again for this one, number 33, is what is the major criteria to be included? Well, the major criteria for inclusion is the financial accountability. For inclusion in the government's comprehensive annual financial report is financial accountability. Letter B, how does an activity or function qualify as a special purpose government? Special purpose government. Special purpose governments are on page 807 if you want to make note of that. The activity viewed as a special purpose government, one, it has its own board, it's legally separate, and it's fiscally independent. So a special purpose government it has its own board, it's legally separate, and of course then if it's legally separate, it's fiscally independent. Letter C, how is the legal separation of a special purpose government evaluated? Well, we've kind of looked at something like this before. Legal separation is usually determined by having corporate power such as the right to buy or sell property, so it's in their name, in that governmental's name. To sue, they have the right to sue and be sued. And of course, it says here, corporate powers depend on state law, thus the determination of legal separation may differ from one state to another. However, this first part is what you want to know is that they can buy property, so they have the ability to have it in their own name, and then they are also have an ability to sue or to be sued. Letter D, how is the fiscal independence of a special purpose government the fiscal independence of a special purpose government evaluated similar to letter C. Fiscal independence they can determine, modify its budget without having to get approval from anybody else. They can levy taxes or some kind of fee generation without getting approval. And they can on the same token, get debt. So they can create its own budget. They know how to set their own revenue, and they can also incur debt. What is a component unit, and how is it normally reported on the financials? What is a component unit, and how is it normally reported on the government-wide financials? A component unit is any activity that is legally separate from the primary, but, this is the key sentence here, it is so closely tied to the government that some inclusion in the government CAFR is necessary. What we're getting at there is, it is still legally separate. However, the general public would be misled if it was not reported. It is so closely tied that it would be included. The account balances of the component unit are included along with the financial statements of the primary government. However, these reported figures are normally discretely presented separate from the balances of the primary government. So that's kind of convoluted. I mean, it's separate, yet most would expect it to be there because they're so closely tied that they would include it, but it's definitely, it is so discrete that it is, these figures are reported, are discretely presented. So you would absolutely see that they are there. Here's another one. All component units may be shown individually, combined, or combined into separate columns for governmental and business type operations. So you have lots of choices. This CAFR is a real informational piece. And letter F, how does a primary government prove that it can impose its will on a component unit? Well, one criteria for identifying component unit includes the primary government's ability to impose its will on the component unit. A primary government is assumed to have this ability if it can remove a board member, can modify its budget, override the decisions of the board, and hire as well as dismiss. So this is where it gets a little bit more clear, because you'd say, well, how and why is this component unit a part of this CAFR, even though we say, yeah, it's so closely related? It's a little bit more than that. If we, as the primary government, can do these things, we can remove a board member, we can adjust your budget, we can override a decision that you made, number 3, as well as dismiss individuals, you you can show then that the primary government can impose its will. And letter G, what is meant by the blending of a component unit? The financial position and the operations of the component unit are shown separately from the primary government. However, if the component unit is sufficiently intertwined with the primary government, it can be included with the governmental figures. Inclusion in this manner is referred to as blending. So what we're saying here is, now we might identify that there's a component unit, but we are going to put all of those numbers together, and therefore you're really not going to be able to identify the component unit separately. That's what we call the blending. And this last sentence, if this component unit is having its debt completely paid for by the primary government, of course, you're going to include everything then, because essentially you are one. Okay, I think, does anybody have any questions about today? No, I'm gonna stop sharing my screen here a minute. Am I back? Okay. I think then we'll end it there for today on Thursday, we'll just look at those last two exercises, 37 and 38. And my request for 37 and 38 is you just need to look at the journal entries. Just do the journal entries. That's it. Don't worry about the rest. Just look through the journal entries. Any questions on today? Brendan, I didn't get a pick on you today to read. So on Thursday, you will read everything from start to finish. In fact, I may not even log in. Would you be able? So, anybody have any other comments or questions for today? So if one from one department to the next or from one fund, yes, because there is no intent for there to be a repayment. It won't be a due to, due from. It's goofy, it sounds odd, but the only way you can really do that, and this is what you got to do, is you got to think, how would I record that if there is never an intent for it to go back? You know, we don't want it to be a liability. We don't really want it to record as revenue. So then our only alternative is, of course, we still got to debit cash, so we're just going to put it to capital. So, yeah. And that's, you know, in those situations where they're trying to set up, you know, an enterprise fund or they're setting up Parks and Rec. So good question. All right. Well, hey, I'll record. You guys got all your USF attire on. You guys have a good Tuesday, all right? If you need anything, don't hesitate to reach out.